Before we get our hands dirty with Big Tin Can, let's take a step back. What kind of market are we talking about here? Well, we're in the realm of SaaS, software as a service, a booming industry with a value that's climbing faster than a rocket to the moon. We're looking at a potential global market size worth over $170 billion, growing at a rate of around 20% annually. Now that's a fast-moving train, and our company, it's riding the front car. But they're not alone. Oh no. They've got competition, Salesforce, Microsoft, Adobe, heavy hitters. But our Big Tin Can, they've got something special. We'll get into that in just a moment. First, a word from our sponsor.
Discover unique gifts with Martian home prints on eBay. Looking for amazing gifts that are out of this world? Visit Martian Home Prints on eBay for a fantastic selection of unique items, including our rare and stylish flag socks. Whether you're shopping for a special occasion or just want to treat yourself, we have something for everyone. Our collection is perfect for those who appreciate creativity and uniqueness. Shop now at Martian Home Prints on eBay and find the perfect gift that stands out from the rest. Don't miss out on these incredible items. Just type Martian Home Prints or click the link in the description below and explore our store today.
Expanding on the strengths of Big Tin Can Holdings, there are several key aspects that make this company a notable player in the sales enablement sector. 1. Robust and versatile platform. Big Tin Can's primary strength lies in its innovative sales enablement platform, which is designed to improve sales productivity by automating content delivery, training, and customer engagement. The platform is AI-driven, allowing it to learn and adapt to the needs of sales teams, ensuring they have the right tools at the right time. This adaptability and intelligence have been praised as game-changing by industry experts, setting Big Tin Can apart from many competitors. The products include Big Can Hub and Big Can Zunos. 2. Strong market position and global reach. The company's ability to secure a solid customer base across multiple industries, such as life sciences, financial services, retail, and technology, is another critical strength. Big Tin Can has successfully established a global footprint, serving clients in key markets around the world, from Australia to the United States. This wide-reaching influence ensures that the company is not overly dependent on any single market, which can be a significant advantage in volatile economic conditions. 3. Continuous innovation and industry recognition. Big Tin Can has a strong track record of innovation, consistently releasing new features and updates to its platform. The company has also been recognized as a leader in the sales enablement industry, being named a leader in the Aragon Research Globe for sales enablement platforms for the 4th consecutive year. This consistent recognition highlights Big Tin Can's ability to stay ahead of the curve in a competitive and rapidly evolving industry. 4. Strategic acquisitions. The company has also strengthened its portfolio through strategic acquisitions, such as the purchase of Brainshark, a leader in sales training and readiness solutions. This acquisition has expanded Big Tin Can's capabilities, allowing it to offer a more comprehensive suite of tools to its clients, further solidifying its position in the market. 5. Financial momentum. While Big Tin Can is not yet profitable, it has shown significant financial improvement over time. The company has managed to reduce its losses and increase its revenue, which has been well received by investors. This financial momentum, coupled with a strong product offering, suggests that Big Tin Can is on a positive trajectory towards profitability. Let's talk numbers, because in this world, money talks. As of the latest reports, Big Tin Can sit on a market cap of about $500 million AUD. Not too shabby. Their revenue over the trailing 12 months is hovering around $48 million AUD. As for the net income, well, here's where it gets interesting. They're not in the black yet. But the loss? It's shrinking. That's progress, people. They've got about 720 million shares outstanding, And an EPS, well, it's in the negative, but it's improving. The market likes that. Slowly but surely they're moving toward profitability. When examining the weaknesses of Big Tin Can Holdings, several factors stand out that could pose challenges for the company as it continues to grow and compete in the global market. First, profitability challenges. One of the most significant weaknesses of Big Tin Can is its ongoing struggle with profitability. Despite its growing revenue, the company has yet to break even, and it continues to operate at a net loss. This persistent lack of profitability can be a red flag for potential investors, as it raises concerns about the company's long-term financial sustainability. While the company has made strides in reducing its losses, the path to consistent profitability remains uncertain, according to Simply Wall Saint. Secondly, the intense competition. Big Tin Can operates in a highly competitive market, where it faces formidable opponents like Salesforce, Microsoft, and Adobe. These companies not only have significantly larger financial resources, but also extensive brand recognition and established customer bases. The presence of such dominant players in the market means that Big Tin Can must continuously innovate and improve its offerings to maintain and grow its market share. The pressure to keep up with or surpass these industry giants can strain the company's resources and lead to strategic missteps, says Stocklight.com, Third Management and Strategic Risks. There have been criticisms and concerns regarding the company's management and strategic direction. Some industry observers and investors have pointed out that Big Tin Can's ambitions might be too aggressive, potentially leading to overextension and operational challenges. Additionally, any perceived misalignment between the company's goals and its execution could result in a loss of investor confidence and market support. This aspect is crucial, as confidence in management is often a significant factor in the valuation and performance of tech companies. Fourth, dependence on acquisitions. While strategic acquisitions have bolstered Big Tin Can's capabilities, this strategy also poses a risk. Relying heavily on acquisitions for growth can lead to integration challenges, cultural clashes, and operational inefficiencies. If not managed carefully, these acquisitions could dilute the company's focus and strain its financial and managerial resources. The pressure to make these acquisitions successful in a competitive environment adds another layer of risk to the company's long-term stability. Fifth, market and regulatory volatility. Big Tin Can is also vulnerable to the broader market and regulatory environment. The SaaS industry is subject to rapid changes in technology, customer preferences, and regulatory landscapes across different regions. Any significant changes in data protection laws, cybersecurity regulations, or other industry-specific regulations could impact the company's operations and profitability. Additionally, market volatility, especially in tech stocks, could affect investor sentiment and the company's stock price, making it harder to raise capital if needed. When evaluating the opportunities available to Big Tin Can Holdings, several key areas stand out that could significantly enhance the company's growth prospects in the coming years. The global SaaS, software as a service market, is growing rapidly, with an expected annual growth rate of around 20%. As more businesses transition to digital platforms, the demand for efficient, scalable, and flexible software solutions, like those offered by Big Tin Can, will continue to rise. This expanding market provides a significant opportunity for the company to increase its market share, especially as businesses increasingly prioritize digital transformation. Big Tin Can has already incorporated AI and machine learning into its platform, but there is substantial potential to expand these capabilities further. As AI technology continues to evolve, Big Tin Can leverage these advancements to enhance its product offerings, improve customer experience, and provide even more personalized and predictive sales enablement solutions. This could position the company as a leader in AI-driven sales enablement, attracting more clients and potentially commanding higher price points for its advanced solutions. The company has a strong presence in several key markets, but there is significant room for growth, both geographically and across different industry verticals. Expanding into emerging markets where digital adoption is accelerating could open up new revenue streams. Additionally, targeting industries that are still in the early stages of digital transformation, such as healthcare, government, and education, could allow Big Tin Can to tap into new customer bases and diversify its revenue. Forming strategic partnerships with other tech companies, especially those that provide complementary services, could enhance Big Tin Can's product offerings and broaden its reach. Collaborations with large enterprises, cloud providers, or data analytics firms could lead to integrated solutions that provide more value to customers. These partnerships could also serve as a gateway to entering new markets or customer segments. As businesses place more emphasis on optimizing their sales processes, the importance of sales enablement tools is growing. Big Tin Can is well positioned to capitalize on this trend, particularly as organizations seek to empower their sales teams with data-driven insights, content management, and training tools that improve productivity and performance. By continuing to innovate in this space, Big Tin can solidify its position as a go-to solution for companies looking to enhance their sales capabilities. The tech industry is ripe for consolidation, with many smaller companies looking for acquisition opportunities to scale their operations. Big Tin Can could take advantage of this trend by acquiring companies that complement its existing offerings, or by merging with companies that have strong customer bases or technologies that could enhance its platform. Such strategic moves could accelerate growth and provide a competitive edge. When considering the threats that Big Tin Can Holdings faces, several significant factors emerge that could impact the company's growth and stability. Big Tin Can operates in a highly competitive environment with some of the biggest names in the tech industry, such as Salesforce, Microsoft, and Adobe, dominating the sales enablement market. These companies not only have vast financial resources, but also possess strong brand loyalty and expansive customer bases. The competition from these established giants could make it challenging for Big Tin Can to sustain its growth, capture new market share, and retain existing customers. Additionally, these larger companies can quickly replicate or outpace Big Tin Can's innovations, potentially neutralizing its competitive advantages. As a technology company, Big Tin Can is particularly vulnerable to the broader market and economic conditions. Market volatility, which is often more pronounced in the tech sector, can lead to fluctuations in the company's stock price and make it more difficult to raise capital if needed. Economic downturns or recessions could also reduce demand for SaaS products as companies cut back on spending. This could directly impact Big Tin Can's revenue growth and overall financial health. The regulatory landscape for technology companies, particularly those operating in multiple regions, is constantly evolving. Changes in data protection laws, cybersecurity requirements, and other industry-specific regulations could pose significant challenges for Big Tin Can. Compliance with these regulations often requires substantial investment in technology, legal resources, and processes. Failure to comply could result in legal penalties, damage to the company's reputation, and loss of customer trust. As a provider of digital solutions that manage sensitive client data, Big Tin Can is a potential target for cyber attacks. The increasing sophistication of cyber threats poses a continual risk to the company's operations and its clients. A significant data breach or security incident could severely damage the company's reputation, result in legal liabilities, and lead to a loss of business. Given the importance of trust in SaaS solutions, any perceived or actual weaknesses in Big Tin Can's security measures could have long-lasting negative impacts. Technology sector is characterized by rapid change, and companies within this space must continuously innovate to stay competitive. Big Tin Can's success heavily depends on its ability to develop and implement new features and technologies that meet evolving customer needs. However, this constant pressure to innovate brings the risk of missteps, whether through failed product launches, technological errors, or shifts in customer preferences that the company fails to anticipate. Any failure to maintain the pace of innovation could result in a loss of competitive advantage. While acquisitions provide growth opportunities, they also come with significant risks, particularly regarding the integration of acquired companies. Big Tin Can has made several strategic acquisitions, but integrating these companies into its operations without disrupting existing workflows or company culture can be challenging. Poor integration could lead to operational inefficiencies, increased costs, and even the alienation of employees and customers, which would counteract the expected benefits of these acquisitions. For investors, Big Tin Can represents a blend of high potential and inherent risks. The company's ability to leverage emerging opportunities while mitigating its vulnerabilities will be critical to its future success. As always, informed investing is key, and those considering Big Tin Can as part of their portfolio should weigh the company's strengths against its challenges, keeping a close eye on its progress toward sustainable profitability. Thank you for joining us on this episode of Tech I Spy. Stay tuned for more insights and analysis as we continue to explore the dynamic world of tech investments. Until next time, invest smart and stay informed.